You are listening to Charting Wealth's comprehensive review and forecast for the week beginning April the 2nd, 2018. Remember, the markets are closed for Good Friday, so we're coming to you a little early. We're going to get a little bit of a break this weekend. Not really, because we're going to be recording our quarterly chart training. Remember, we're going to do that review because the first quarter ends. Actually, it ended today. Now, officially, of course, the end of the month, but this is the last trading day of the month, Thursday. So we will be recording that for you over the weekend and getting it out. We also have a special training attached to today's comprehensive review and forecast, and that is how to use freestockcharts.com and TC2000 to do practice trades, to actually track them. I have found over the last year or two, so many of the online brokerage firms that used to have these great virtual trading platforms just aren't really offering them anymore. So we have a great one there at freestockcharts.com, and we've got a great training attached to the folks who actually subscribe to the daily market review that includes the comprehensive review and forecast. We have attached to this one a link to that training. So please look for it. You'll see it in your email. Let's jump right into these markets. We see everything up on Thursday. Stocks up, bonds up, gold up just barely. But let's jump first into the S&P 500. We ended the week on an up note, 1.28% up for the day on Thursday, but we have a down candle in our Heiken Ashi candlesticks. Derivative oscillator losing some downward momentum. Price percent oscillator headed down, not at the same strong angle it had been before, but still headed down. Price movement is below the weekly trend line and the two-day trend line. Now, as we look at the two-day chart, we see that, again, it is also flattening out a little bit. Every week it's been losing some of that downward momentum. And maybe things are flattening out somewhere around the 262 mark on the S&P 500. It's sort of bounded down there and sort of holding. So we'll continue to keep our eye on that. Again, price movement below the weekly and the two-day on the two-day chart. And then where we see the up movement is over the course of sort of bounding off the bottom there around 262. We see over the course of the day on Thursday, up movement actually pushing through at the end of the day, pushing through the two-day trend line and a crossover going up on that 4-hour chart. So we'll see how that shapes up over the course of the next week. Again, keep in mind, everything's down, two-day and the weekly. The 4-day is in a pullback, and we'll see how much of that's a pullback or a reversal as the week starts. If things roll back over going down, of course, you've got a good jumping in point for an inverse trade. You might look at something like SH, which is an inverse fund for the S&P 500. And of course, it goes up when the S&P 500 goes down. That is a short, so it might be something you might look at. So let's keep moving through these charts. We'll stay on the weekly and go next to QQQ. It was also up for the day quite substantially, 1.83%, but it was a down week on our Heiken Ashi candlesticks. Things peaked out back on Friday the 16th of March, and two down weeks over the last. The derivative oscillator losing momentum, continuing to head down. I guess the gaining downward momentum is what we typically say, and the price percent oscillator still headed down, not at the same steep angle it had been the prior week, but down nonetheless. We have the weekly and the two-day in confirmed down moves. The two-day continues to move down. Also going into our 10th, that's 10 days now of strong down movement and gaining momentum on the price percent oscillator and the derivative oscillator headed down. And of course, we look at that 4-hour chart, just like we saw on the S&P 500, except at a different price level, of course, around 156. We see things bottoming out and heading up. Again, price movement is well below the two-day trend line still, but we'll keep our eye on things and see how the week begins to sort out. If it does turn into a full-blown pullback and then rotate back over going down, giving us a jumping in point for a safe entry. We'll continue to keep you posted. let's talk about what's going on TLT. The 20-year bonds getting very close. In fact, we're going to go ahead and call this a crossover going up on the weekly chart. We're going to go ahead and do that. Now, again, at the beginning of the week, if it's a big down week for bonds starting off, it could pull it back over. But again, we had a strong up week on bonds. Bonds really bottoming out right around the 118 mark and then pulling up over the last several weeks. Since then, derivative oscillators also flipped over to the positive. Now we look at the 2-day chart. What do we see? Of course, it crossed over going up back on the 5th of March and sideways for quite a while, and then slowly but surely moving up the last 6 days, particularly the last 2 days. Strong up movement on those Heikin Ashi candlesticks. On the 4-hour chart, what do we see? We see bounding up movement over the course of the day on Thursday. We will take a look at 10:30 in the morning on Monday to see how things look on the 30-minute chart, or if you're just a 4-hour charter, then you can look and see how things look at noon. You might have a good jumping in point on the 4-hour chart at that point on TLT after the weekly vertical crossover. So we will be sending out a text notification of that over the weekend. And of course, we can bring our golden weekly vertical crossover line over and make that official, as well as rotate our arrow up. And that's about the most official thing we can do. And of course, we'll have to get rid of the trend line for the moment since we have a new trend that's setting. We prefer to draw them from where the new trend starts, although we could actually draw one a little early since we've had 2 prior weeks of down movement before the weekly vertical crossover on this latest one. Not the strongest, but the fact that the derivative oscillators already flipped over gives us more security. Okay, lastly, we will go to gold. Gold, of course, we saw the weekly chart or the weekly price percent oscillator bounce off the red signal line and actually head down. Derivative oscillators maintained about the same power over the course of the last 2 weeks, the week ending both the 23rd and now on the 29th. We do see that it is an up green candle, but of course, remember, it is our indicators that are the most important things that we pay attention to. Our Heikin Ashi candlesticks are heading up there, but again, gold is in a strange position. A lot of up movement, then a lot of pull back. That's why we have a long candle wick on the top of the green candle. We also have a little bit of a bottom on it too. As we look at the 2-day chart, of course, it originally crossed over going up back on the 23rd and now appears to be moving back over after 2 days of strong, two-day candles of strong up movement, 4 days. This latest 2-day candle is a downer. In fact, a solid red down candle with a longer wick at the bottom. So again, a fairly decent sized wick at the bottom. That has, of course, pulled over the price percent oscillator. Derivative oscillators lost upward momentum, hasn't crossed over yet. So gold's a bit curious right now. And as we look at the 4-hour chart, we can see where gold peaked out back on the 26th, Monday the 26th of March in the afternoon, and then has been rolling over since that time. So again, gold is perhaps setting up for continued down movement. We'll have to wait and let the schizophrenia end with that 2-day chart rotating over, which it may do at the beginning of the week. And if it does, it might set us up for some nice down moves in gold. Folks, that's where we are as we end the week. And of course, we've got lots of great stuff for you. Like we said, we have that great training. It'll be linked into your email. You'll see it. Please make sure to pay attention to that. You can use your trade worksheet along with it. It'll help you track your practice trades. It is a great little piece of gear that's attached to your freestockcharts.com and your TC2000 software. And in addition to that, we'll be doing the quarterly review over the weekend. So stay tuned, my friends. All the best. God bless from the whole team here at Charting Wealth World Headquarters.